Okay. Let me see, actually, make sure I got my, okay. Okay, let's continue. As I said, chapter 14 and 15 is financial activity, our financial institutions, our money and banking. I gave you a little history lesson on the dollar bill and all the history that's in it. It's kind of a little crazy, but it is what it is. So today is kind of putting some things together with the dollar bill, or just the function of money and how we define money. Also looking at banking institutions. I will have one formula for you today, and that is for another multiplier, which we call the monetary multiplier. And it basically shows us how banks take our money and our investments into the banking system, and they make more money. All right. So when we take a look at money, there are four functions of money. Money obviously is a medium of exchange. Before we had money, we literally operated out of a barter system, like a chicken for, some loaves of bread or whatever the case may be. Number two, it's also a unit of account. So we're able to determine the value of what we're buying in the dollar amount. How many are in my marketing class? When we take a look at price does what? It communicates value. So that's when we're looking at a unit of account, the goods value in dollars. So price communicates value, and we do that in dollars. It's also, number three, a store of value, all right? The wealth in money form, the wealth in money form. And then also money is also very liquid. Okay, can we move on? So we have functions of money. I also want to look at how we define money, the definitions of money. Now, we've had a change in how we define money. We actually used to have three definitions of money. We called it M3 money or MZM money. But what has occurred is we basically kind of taken the M3 money and pulled it into what we define as M2 money. The first definition of money is M1 money. That's the money we use all the time. So that is our currency, our coins, our dollar bills, but it's also what we call checkable deposits. Now, what I mean by checkable deposits, I'm talking about what we call demand deposits, so that I can get access to my money on demand. All right, so this would be your checking account, and as I said, go back. It hasn't been used in a while. I gotta check technology on this. It is also what we call demand deposits. So I'll put it up here on the board. It's also what we call demand deposits. So there's no penalty for early withdrawal. All right, checkable or demand deposits.
When it says credit unions,
well, we'll get to what a credit union is because that's considered a thrift institution. But it's no matter if you have a demand deposit at a credit union or a bank, but it's just something where you can get your money on demand. That's what we consider a checkable deposits, all right? So, when we look at those demand deposits, we can get them at commercial banks, which are for-profit banks. Savings and loan institutions, we basically don't really see them no longer in the market. There was, I guess maybe about 15 years ago, a big saving and loans debacle. And savings and loans really just kind of went defunct. Mutual savings banks and then also credit unions. What we have today is a real big push for membership in credit unions. How many are members of credit unions?
I used to be.
Yeah, real big push. You see a lot more marketing, advertising for credit unions for the fact that, you have kind of part ownership in it. It's not for profit. But a big push in regards to that. So we have M1 money. The second type of definition is what we call M2 money. Now, this is the bigger part of money, but this part of money includes investment. So we have M plus money, so that's the coins and currency, plus we have what we call near monies. And these are things like mutual funds, CDs, and I'm not talking about records. I'm talking about what? What is a CD in a financial institution? What is a CD? It is a certificate of deposit, all right? So when we're looking at CDs and investments that way, we're looking at M2 money. Now, they have listed here what we call savings deposit, including the money market. These are considered time deposits because there's a timing factor associated with M2. So there's a penalty for early withdrawal. And then, of course, investments such as mutual funds. And we'll talk more about that as we get closer to financial economics in chapter 17. So we have M1 money and we have M2 money. As I said, M2 used to be broken into M2 and M3 money, where our time deposits were dependent upon if your CD was less than $100,000 or more than $100,000. But now it's just basically kind of lumped together. All right. What tells us a dollar is a dollar? What tells us the purchasing power of the U.S. dollar?
Currency?
Well, it is currency, but what tells us the purchasing power of the U.S. dollar in our market?
Is it gold?
Used to be, and we'll talk. We used to have a gold standard in Fort Knox. No longer. No. Wish it was. Maybe no. I don't know. It's the gold standard, and you'll learn it's very stagnant. It really kind of stifled us from international activity. That's why we had to move away from gold standard. But what tells us a dollar is a dollar? I don't know, Dylan, did you have your hand up?
Yeah, faith.
The faith and confidence in our system. And, it's like, oh my goodness, but that is truly, it is. The faith and confidence in our economic system is what tells us the purchasing power of the U.S. dollar, especially when we go into international market. Now, I think it's after your fourth exam, we'll do international trade, and we'll look at currencies and values in the dollar index and those kinds of things. We used to have a gold standard, kind of a fixed peg system. We now operate on what we call a managed float system, but and some other systems in between there. But again, being able to move in the global market. Yes.
When you say they determine the value of money by faith, are you saying that whatever they think it's worth, they just like put a number on it? pretty much?
Well, what we believe the power of our economic system, now again, we got to kind of look at timeline. So after World War II, well, before, pre-World War II, the United States was major manufacturing sector, world leader, that kind of thing. Then after World War II, things changed, so we had a lot more global competition, global production in other parts of the world. All right, so when it then came to international exchange coming into, you know, a really big scene, we had to be eligible to kind of wine and dine and move and shift and things in regards to international trade. So when I say the faith in our economic system is the power of our economic system, the way we appear to other parts of the world. And because international trade and exchange is extremely important. I don't want to jump too far ahead of myself, but you know, there was a time where every world bank kept a supply of US dollars because you know what I mean when I say the term benchmark? It's what you measure everything else against. The US dollar was the benchmark in regards to world currency. All right? When we look at, I won't say benchmarks, but leaders, you have to go with the British pound. The British pound, the Queen and those folks, they will never, ever, I mean, because they're old money, but they will never be broke. The British pound can command so much purchasing parity in the international market more than any other currency in the world. It is the British pound. All right?
The highest currency, right?
The power of that currency in the international market. Okay? The Canadian loonie, which is the equivalence of their dollar to our US dollar, maybe about 4 years ago, for the first time in their history, the purchasing power of the Canadian loonie was the same as the US dollar, which was like unfounded. You all heard of euros, right? And that is the currency of the European Union. That also commands quite a bit of purchasing parity in the international market. So you look at the power of your currency. And for our currency, it is our faith and confidence in our system. And it's not as shaky as it might seem, but you know, we're still welding some powers, you know, in regards to overall activity in the international market. Some of the things that have changed over the years just recently, because we look at changes in or manufacturing in China, like we had so many goods and goods produced in China. There's a shifting in the international market. China, I was having this conversation this weekend, as a matter of fact. China is not as strong. We're finding other manufacturing sectors in other parts of the world. And so with that change, there's going to be a change in their exchange rate and their purchasing power. So, but the U.S. dollar at one point was the international benchmark. Not that we have lost everything, but we're just not as powerful as we used to be. Okay? All right. Let me do a little bit of a review in regards to some of the things that we've talked about previously in regards to getting ready for this video exercise. Number one, the Federal Reserve, the banking system. All right, so I talked about the Board of Governors, the Federal Reserve banks. They are the Bank of the United States, the Fed, all right? And so they're considered the banker's bank. So the Federal Reserve banks, when you remember we talked about how they need loans, and if other small banks within our community needs loans, they'll go to maybe around here, maybe the Bank of Philadelphia in regards to getting loans. But the Fed has the oversight of monetary policy, and they oversee how we operate within our monetary system, whether we need money or whether we need to reduce the amount of money in the system. Okay? In regards to structure, again, this is just a review. of things that we talked last week, but I just give you the structure in an actual format. So we have the Board of Governors, and the chairperson is who?
Janet Yellen.
Janet Yellen. All right, first female chairperson of the Federal Reserve Board. We have the Federal Open Market Committee. Remember I told you they are the operating arm of the Fed. I talked about 4 tools of the FOMC. All right? What is the reserve requirement? What is the reserve requirement? What did I say that is? And how does that control, how does the FOMC control that? What is the reserve requirement? This is the first tool of the FOMC.
The percentage of money banks must maintain.
Okay. It's that percentage that banks must keep in-house. All right? They can increase or reduce that.
What's FOMC?
The Federal Open Market Committee. The Federal Open Market Committee. Second tool of the Fed. What was the second tool?
Discount rate.
The discount rate. What did we say the discount rate is?
Interest rate, Fed charges, member
Banks,
for loans.
right? Right. It's the interest rate. It's not. It's different than the FFR. It's different than the federal funds rate because that's the interest rate for overnight loans. All right. But discount rate.
So
Number one tool. Yes.
RR is reserve requirement, right?
Pardon?
RR
Is reserve requirement. Yes. Number one tool of the Fed. The open market.
Securities.
Right. Open market securities. This is investments. Okay? And then your text refers to the financial crisis of 2007 and 2008. And after that, a 4th tool was added. And remember, we said that was the auction house. Okay, so that was since the crash. Now banks have to bid to show their solvency in regards to getting loans. All right? So let's kind of go back to our chart. So we have the Board of Governors. We have the Federal Open Market Committee. That's the operating arm of the Fed. Now, the FOMC, remember membership, we have the 7 governors, all right? And we have 5 bank presidents. All right, so the membership on the FOMC totals 12. And remember I told you out of the 5, 4 of the seats rotate between 11 of the banks. The bank president of New York has a permanent seat on the FOMC. And also remember I told you that our economy operates on a little bit of cash and a lot of credit. So interest rates are important. All right? So we have then our Federal Reserve banks. Now the Federal Reserve banks, they have bank presidents. They also have their own board of directors or board of trustees. We have commercial banks, which are what we consider for-profit banks. Then the flip side of that is our thrift institutions. Now that's where I said we're having a lot more activity, a lot more marketing towards credit unions and being a member of a credit union. We have a credit union right here on campus, right, in Pocono Hall. And they have memberships. I know in the Bethlehem campus, they actually have an office right in College Center. So, I mean, they're really looking at doing a lot more marketing. But we did have included in that savings and loan associations, which we don't see much now, mutual savings banks. But, you know, credit unions have just really bubbled to the top. And then us in the bottom, and that's just households and businesses. But what the Federal Reserve Bank does affect what happens in our household. Okay? Now, remember we looked through the dollar bills. How many, did we have 8 of the 12 banks? How many did we have represented?
7.
Okay, we did pretty well though, out of the 12. So, first bank is Boston. Okay, so remember we're breaking away from the king, dumping tea in the harbor, rebels with a cause, you know, all that kind of thing. So the first Federal Reserve Bank is Boston, then New York, then Philadelphia, then Ohio, Cleveland, then Richmond, going down to Atlanta, then up to a big area, Chicago. That's a really big area. Then St. Louis, Minneapolis, which also is fairly big, Kansas City, Dallas, and then San Francisco, which does most of the western part of our country, including Hawaii and Alaska. Yes?
For the test, will we have to know the 12?
No, you won't need to know. Just know that we do have 12.
Okay.
Okay? All right? So remember what I had told you, because if you look where, it's not pictured here, where the District of Columbia is. We were going to have our capital actually in New York, but founding fathers thought that it was just so close, financial district with government, so they moved the capital to Washington, D.C. However, New York is still our mecca in regards to activity in the financial market. Okay? All right, so now what I'm going to do now is pause this, because I'm going to show you a video, and